Hello and welcome to the channel. Today I'm going to be talking about financial instruments. When we are performing audit of a company, we normally go through a process, a general audit procedure where we need to assess the client's financial instruments. So while performing that procedure, you need to identify if the client had any financial instruments during the year, and then you have to design your audit procedures. Okay, but you can only do that if you have a good understanding, or if you understand the fundamentals of financial instruments. So before I look at the audit of financial instrument, I'm going to be taking you through the fundamentals just to get you to understand what the fundamentals have before we start talking about audit, because you can't audit what you don't know. Okay, so we're going to look at just to refresh our memory, what is financial instrument. Okay, so when we are talking about financial instrument, you have to look at it from the perspective that financial instruments will often give rise to financial assets for one entity, okay, and financial liability for another entity. That should always be the first thing that will come to your mind when you're talking about financial instrument. Remember, I said if you don't understand the fundamentals of financial instrument, there's no how you'll be able to properly audit financial instruments. Okay, when you won't even know that this is a financial instrument if you do not understand the fundamentals. So it will give rise to financial assets for one entity and financial liability or equity for another entity. So we're going to break this down. Okay, what are the financial instruments? How can you identify a financial asset, and how can you identify a financial liability? So let's look at some of the financial assets that we might come across. So we have separated the classification of financial assets into three different categories, okay, because financial assets can either fall under debt investment or equity investment or derivatives. Okay, so these are the classification. So let's look at each of these. So how can you identify, if you're looking at the client's financial statements, how can you just know by looking at it, okay, this is a financial asset or this is a financial liability? Okay, that's what we're going to be looking at. So let's look at debt investment. So debt investment is a contract that requires a fixed payment to the holder, okay, and usually it might come with interest. So what are some of these financial assets? So trade receivables. So most of the times you are auditing and you're auditing trade receivables, but some people don't know that what they are auditing is a financial asset. So even by auditing trade receivables, you're already auditing a financial asset. Okay, bonds are financial assets, debentures, loans, mortgages. Okay, so these are examples of financial assets. For some auditors who are very junior, who really don't have experience, when they are performing the general audit procedures and they ask them, does the client have any financial asset or financial instrument, most of those junior auditors will say no. Why do they say no? Because they do not, even if the client has trade receivables, they do not have the understanding that trade receivables falls under the category of financial asset or financial instrument. Okay, so whenever you come across this should give you a hint that these are some financial assets. Okay, and when we start looking at the audit, you will see how we audit some of this. Okay, now let's look at the next category, which is equity investment. So an equity investment is a contract which represents a residual interest in the asset of an entity. Okay, an example of this is share capital. So if you're an auditor, you must have audited share capital a couple of times. By auditing share capital, you're actually auditing a financial instrument, okay, because it falls under financial assets. And I already have a lot of videos where I've looked at the audit of share capital. That is alright, because I've had people asking me, can you show us how to audit financial instruments? There's actually nothing like the audit of financial instruments. You have to audit the financial statement line item, which is an example of this is share capital. Okay, so by auditing share capital, you're already auditing a financial instrument, because remember, this is also a financial asset. So the other category we have is the derivative. Okay, derivative is a financial instrument that has some of these characteristics. Okay, its value changes in response to changes in the underlying instrument. Okay, an example of these are things like maybe currency swap, okay, futures. So those are what we call derivatives. So if you have a client that has like currency swaps or futures, you should know that, okay, this is a derivative and it falls under financial instrument. Okay, so this is just to give you an idea of how to identify financial instruments when you see them during your audit. So now let's look at financial liability. So financial liabilities are classified as trade payables. Most of you might have audited trade payables a couple of times, but you might not be aware that, oh, what I'm auditing is a financial instrument. By auditing trade payables, you are already auditing financial instrument, okay, because it is a financial liability. Loan payables, we audit this every time. Bank borrowings, interest rate swaps, futures, foreign exchange, okay, and convertible debt. So these are financial liabilities. Okay, so I know most people get scared when they start hearing about financial instrument, but it shouldn't be scary, okay, because even something as simple as trade payables is already a financial instrument. Loan payable, okay. So so whenever you come across this, anytime you're auditing, you should know that what you're auditing is a financial instrument. And the other part, which may seem a bit like the difficult part, is the impairment of this financial instrument, okay, because the IFRS 9 standard requires that this should be tested for impairment. And to do this, we look at this using the ECL model, okay. And in another video, I'm going to show you how we actually audit a client that has like trade receivables, how we perform the expected credit loss model. So in the next video, I'm going to show you how we actually use the ECL model, okay. So that will be it for today. This video is just to give you the fundamentals of how to identify financial instruments when you see them in the financial statement. So I want to thank you for watching the video today. I'm going to see you in my next video, and bye.